3.
Salam sejahtera. We Group 1 IDU comprise of myself, Farizan, Masri, Rizal, Fatin and Shuang. This is outline of our presentation. I will start with Bonia Corporation Berhad and followed by Kuchai Development Berhad, Ibrahim Holding Berhad, Sunway Construction Group Berhad, and Shangri-La Hotel Malaysia Berhad. Next, Bonia Corporation Berhad. I just want to give a brief overview about Bonia. Bonia engage in product design, manufacture, promotion, marketing, distribution, wholesale and retail of luxury leatherware, footwear, apparel, accessories for both men and women under its in-house brand as well as other international licensed brand. Bonia was established in 1974. In 1988, Bonia opened its first boutique in Malaysia, and in 1990 to 27, Bonia expanded its business to Indonesia, Hong Kong, Brunei, Taiwan, Vietnam, Japan, Thailand, China, and Saudi Arabia. And today, Bonia owns more than 1,200 sales outlets and 185 standalone boutiques throughout the world. And in September 2015, Bonia created shop online bonia.com to cater the growth in popularity on the online shopping. Next, I just want to highlight 3 ratios on Bonia. Number 1 is the book value per common share ratios. The book value per common share ratios was increased compared to 2015. This was due to an increase in total shareholder equity value from 404,000 million in 2015 to 426 million in 2016. Book value per common share is a measure used by owners of common shares in a firm to determine the level of safety associated with each individual share after all debts are paid accordingly. Next, cash return on asset. Cash return on asset shows investor how efficiently the business is at using its asset to collect cash from sales and customers. The ratios was increased compared to 2015 to 13.84%. It showed that company was efficiently generating cash from its asset investments. Next, I just want to highlight 4 components in the Bonia income statement, namely cost of sale, general and administrative sale, selling and distribution expenses, and profit for the financial year for the vertical analysis. Cost of sale was increased to 44.97%. That affected their gross profit shrinking to 50% in 2016. However, the company was efficient in cutting their selling and distribution expenses to 29.6% in 2016 compared to 31.16% in 2015. But their general and administrative sales expenses was increased to 18.56% in 2016 compared to 17.6% in 2015. From this vertical analysis also show that their profit for the financial year 2016 was decreased to 4.5% in 2016. That's all about the Bonia. So I will pass to Mr. Masri for the Kuchai Corporation.
Thank you, Mr. Farizan. I will present about Kuchai Development Berhad, incorporated in year 1967 and listed on main market of Bursa Malaysia Securities Berhad. Its main activities consist of investment, holding, and rental of properties. Next, I will discuss about 3 ratio: dividend payout ratio, earning per share and gross profit margin. Number 1, the dividend payout ratio is the amount of dividend paid to stockholder relative to the amount of total net income of a company. Comparing 2017 and 2016, the ratio improved in 2017. This is because in 2016, the company incurred loss in operation due to high expenses. Number 2, earning per share is a company profits divided by its number of common shares, and in 2017, the ratio improved tremendously because in 2017, company incurred profit. Lastly, gross profit margin is a financial metric used to assess a company's financial health and business model by revealing the proportion of money left over from revenue after accounting for the cost of goods sold. The ratio almost similar in 2017 and 2016. It shows the company's stability of gross profit margins. So I would like to invite my dear friends, Mr. Rizal, to present next.
Okay, thank you. So I will continue with Brahim's Holding Berhad. As we all know, Brahim's is a company that supplies food and beverages to the Malaysian Airlines. But before that, let me talk about the background. The company was established in 1982 by Mahmud bin Burhanuddin and was called Tamadan Bonded Warehouse. And the company dealt with mostly bonded warehousing, freight forwarding and transportation services before changing to the F&B sector. And in 2008, LSG Sky Chef Holding Sdn Bhd acquired 51% of the Brahim Sdn Bhd for 130 million ringgit and was later known as Brahim SATS Food Services Sdn Bhd. And Brahim Holdings Berhad are now comprised of Brahim SATS Food Services Sdn Bhd, Dewina Host Sdn Bhd, Cafe Babra Franchise, Amuda Sdn Bhd, and TISB Sdn Bhd. And at present, the LSGB serve up to 36 international airlines in KLIA with a total output of 50,000 meals per day. And I will also talk about the profit margin of the company. As we all know that Brahim has been making losses for the last 2 years, 2015 and 2016. And if we look at the profit margin, which has dropped consecutively from 2015 to 2016, because both sales and net income in both years continued to make losses. And on return on asset, company's ability to fully utilize asset to generate income also decreased. And lastly, return on equity. The ratio also dropped compared to 2015, and it shows that the shareholders' equity was not able to increase the income of the company. Thank you.
Hello, so I'm going to present on Sunway Construction Berhad. So Sunway Construction Berhad is a fully integrated construction company providing a full range of design and construction service, including buildings, civil engineering, infrastructure, mechanical and etc. So I'm going to brief the background of the Sunway Construction Berhad. Basically, Sunway Construction Berhad was founded by Tan Sri Datuk Seri Dr. Jeffrey Chiah Au in 1980. Sunway Construction Berhad is a #1 pure play contractor in Bursa Malaysia and the first construction company in Malaysia to be included in FTSE4 Good Index. 35 years of excellence, has 23 billion turnover recorded to date. Market capitalization is more than 2 billion and has 2,025 employees. So I'm going to focus on the 4 ratios, that is asset turnover, average collection period, inventory turnover and debt ratio. So for the asset turnover, as we can see here, the ratio quite decreasing. So it shows that the company wasn't use its assets efficiently and most likely maybe have management or production problems. So for the average collection period, the ratio quite increasing because of the company cannot collect the payment from their clients faster in 2016 compared to 2015. So for the inventory turnover, the ratio decreasing. So it shows that the inventory turnover move faster in 2016. For the debt ratio, the ratio decreasing. So it shows that the company exposed to the risk is a very low and the company has a very stable business. Next, I will pass to my friend Shuang.
Hi all, my name is Shuang. I'm going to present on Shangri-La. Shangri-La Hotels Malaysia Berhad is incorporated in 1971, which is a leading hotel company in Malaysia, listed in Bursa Malaysia Securities Berhad. The company and its subsidiary owned and operate luxury hotels and resorts in strategic locations such as KL, Penang, and Sabah. It is associate company in Myanmar also, such as in the Yangon. Just like in the picture, the first one is from Tanjung Aru, Sabah. The second is the one that from Kuala Lumpur, Shangri-La Kuala Lumpur, and the third is from the Penang. This is all the brand that they can make it as a leading hotel company. Besides, Shangri-La Hotels also engage in property management and investment. The next, I would like to show you on the three ratio, which is asset tax ratio, interest coverage, and working capital. For the asset tax ratio, it is obvious showing that the increase in the asset tax ratio indicate that the company is strong in having sufficient in the short-term asset to cover the immediate liabilities. For the interest coverage, a sharp decrease in the interest coverage showing that the company is actually in the debt burden is higher in 2016 compared to 2015. This is related to the high amount in the short-term borrowing in 2016 compared to 2015. Finally, in the working capital, both ratios showing that the working capital ratio is less than 1, which is a strong indicator that there will be a liquidity problem in the future. But in the 2016, when you compare to 2015, the ratio is slightly increased compared to 2015. That's all from the Shangri-La presentation. As a conclusion for our 5 groups, each of us learned between different industry on the financial background from five industry. We are very benefit from these courses and the exposure on the company background. Thank you for the watching and hope you enjoy with our video. Thank you.